Thursday. Boy, that time flies when you're having fun, but it's time to get back to work tonight after all, right? Thursday evening, it's August the 27th, 2020. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're here for the first time tonight, it's great to have you with me tonight. My job tonight is to help us find the best entry setups for tomorrow. That's Friday, not just any Friday, but a summer Friday, the last Friday of the month, the final Friday's trading session. I got a jam-packed video in store for you guys and gals tonight. The charts are all prepped up in the background, as you can see. We got the oil, we got the gold, and of course we got those E-minis on our radar for tomorrow. Boy, a lot of interesting charts to look at tonight. We have big moves up, big moves down, head fakes galore, open loops everywhere. I can smell some traps setting up for tomorrow's final Friday trading session. Before we jump in, though, and get our hands dirty on these charts, ready for tomorrow, I just want to make sure to remind you guys, make sure you subscribe to this YouTube channel. I don't want you to miss all the good stuff we publish every evening on this video newsletter. And don't forget, if you guys have any questions, drop those questions in the comment section below. I'd love to answer all the questions after we finish up the video tonight. And as always, I appreciate you guys and gals tuning in every evening. If you're anything like me and you rely on this review every evening to get your mind right and those charts right for tomorrow, hit that thumbs up button for me. Really appreciate you guys stopping by the channel here this afternoon. Subscribe, drop those questions in, and thumbs up if you guys enjoy the content here tonight. But speaking of the content, let's get after it here. Time is ticking. The last Friday of the month is right around the corner. Let's take a look at the schedule for tomorrow. Kicking off this video tonight, let's grab the Econo Day calendar and let's see what we got going on here tomorrow as we wrap up the week. We wrap up, almost wrapping up the month, but final Friday of the month of August. It's not quite the final Friday of the summer. That'll be next Friday, ahead of that Labor Day holiday weekend, right? But this is the final Friday, right, of the month of August. Now, anytime we have a Friday morning, right, what do we always think? Friday mornings are early in, early out. You gotta have a good reason to be trading the afternoon on a Friday. Hopefully, it's good weather wherever you are here, at least in the northern hemisphere, right now, summertime weather. So, get out of the office tomorrow afternoon, make your money tomorrow in the morning session. We trade every morning in our trade room from 8 o'clock to about 11:30 Eastern time, right? Tomorrow, I would assume, though, best trades from 8 a.m. till, I would imagine by about 10:45, 10:30, we'll probably start seeing things slow down tomorrow morning. So just be aware of that smaller window of opportunity that we're dealing with here tomorrow, right? So early in, early out, got to have a good reason to be trading late in the day tomorrow. Now, don't forget, right? Don't forget, we're still battling through this end of month volatility. We've been talking about this all week, right? End of the month volatility, a back to school low volume. And we saw how that combination of low volume and back to school, right? And I call it the back to school time. This is that transition from the summer into the fall season. The fall season is really one of the best times of the year to be a trader, but things do tend to get a little bit kooky these last couple of weeks while the parents are distracted, while everybody's trying to get their kids back off to school here. So end of month volatility combined with that back to school end of August kind of low volume, right, end of summer, and that you really saw how those markets can whip right in today's trading session, of course aided by the Fed announcement here this morning. We're still listening in right now for stimulus, right? Stimulus package right now. It does sound like the stimulus package is a bit on the rocks right now. We haven't heard any breakthroughs regarding the stimulus package in Washington, D.C. Hurricane Laura, we talked about last night, right? Hurricane Laura what we're seeing right now is it has made landfall. It is still a hurricane as it buries into Texas and Louisiana, but it doesn't appear to be as bad as they were initially expecting. It kind of made landfall as a Cat 2 instead of a Cat 4. And we heard from the Department of Energy a few hours ago, and they specifically said that there was not as much damage as they were worried about to the infrastructure there. And you could definitely see oil rolling over because of that. So it looks like the Gulf states may have not to say there wasn't been a whole hell of a lot of rain, wind, and power outages news, but it sounded like the worst of it, right, was not received, right? Thank goodness. And of course, if you're being affected by that right now, stay safe down there, stay dry, find some high land. Man, those hurricanes are scary stuff. We didn't hear any updates today regarding the vaccine developments. We know that there are, right, still a lot of vaccines in the mix right now, but man, oh man, just a peppering, right, of news that we saw this morning. So lots of, again, low volume, right, high volatility as we go into next week, or as we go into the end of the week for tomorrow, right, and of course early out tomorrow. Big news tomorrow morning. It's pretty easy to see, right? Big news tomorrow. We got that GDP number, the trade number and the income. We had GDP here this morning. We got trade, we got personal income at 8:30. But honestly, I don't think that's the big news of the session for tomorrow. If you could only be at your desk for an hour tomorrow, I think my money's in the PMI number tomorrow. That Chicago PMI number at 9:45 Eastern time, right? I think that's going to be where you're going to get the biggest kind of bang for the buck, if you will. Not to say that we won't get some options here off the 8:30, trades and income, but anytime I see PMI, PPI, CPI, right? Anytime I see those types of those types of letters in front of a news report, it's usually going to mean inflation. It means dollar. It means gold. It means everything, right? So there's a lot of movement we expect to see after that Chicago PMI number at 9:45 tomorrow. So that's definitely the time that I want to be at my desk tomorrow, right? Of course, we'll be in our trade room Monday through Friday, 8 o'clock Eastern time. I'd love to have you with us in the trade room every morning, Monday through Friday, 8 o'clock Eastern time. I'll put all of the membership links you guys need to get registered, to come out and join us every morning at the opening bell. We'll put the plan together tonight, and of course, we'll trade that stuff every morning in our trade room. So in the description of this YouTube video, I'll drop a link in there for you guys to get registered as a brand new member and come out and kick some butt with us every morning in the trade room. So early in, early out. Don't be surprised tomorrow if it's a bit sluggish with the end of the month, kind of back to school, right? Lower volume, but don't underestimate potential for some nice big moves tomorrow as we go into this end of the month volatility. All right, speaking of volatility, let's get some charts going up here tonight, shall we? News is all ready to go here for tomorrow. Let's grab a look at the charts. Boy, lots to talk about tonight on these charts. Where do I begin? Well, over on the gold, right? Gold was a little bit crazy today, right? Just a little bit crazy today. Boy, that ATR got pumped up pretty high on the gold. Gold's a bear flag, but there's a range mixed in there. So gold's going to try to pick your pocket tomorrow. We're going to make sure that doesn't happen, right? We'll be ready to capitalize on traps for tomorrow. Oil, I'll tell you, oil has just open loops galore right now. You notice on the little snapshot there, right? Open loop down, open loop up. It looks like there's going to be a little bit of whippiness to it, but I got a pretty good plan for oil. So if you're an oil trader, definitely want to stick around for that. And then over on the E-mini, boy, the E-mini, I will definitely say is probably the hardest of all of the markets to kind of pin down today. It did take me a little while because you can definitely feel the market. We're overall bullish right now. There's no doubt about that. But it smells like the market is starting to go into a range as we go into this summertime Friday, final Friday, right, trading session. So let's start off the session tonight with the S&P 500. Now you'll notice I did take a little bit of a slower time from approach to this chart tonight because I wanted you to be able to see kind of this bigger picture to it. I don't think there's a lot. You really can't get a lot out of this if you just look at what happened today. You really have to put this into context of what's happened over the past 2 days, 3 days. And basically what we see here is it's a bull spike in channel that ultimately failed to retest its high. That is the kind of the meat and potatoes of what's happening here right now. It's a very strong move up, right? And you got this kind of grinding motion higher, and we definitely felt that grinding. Well, it didn't feel like a grinding motion, right? On the faster time frames, it felt like this market had lost its mind there for a while. But you look at it again in a bigger picture, and you can see that spike up into this bull channel. Now, spike and channel patterns are notorious for really deep pullbacks, right? We talk about this quite a bit on this newsletter, right? Spiking channels are notorious. In fact, that's one of the things we always love about spiking channels. This one was a very sharp pullback right here as we went into that 1:30, 2 o'clock this afternoon. But you'll notice exactly what happened, right? So they get that deep pullback, so at this point, right, it looks like a duck. It's acting like a duck, right? It's starting to, something tells me it's a duck, right? It's a spiking channel, spike up into a channel, nice deep pullback. And you'll notice here's the kicker, right? Here's the kicker. It goes right back up again, but it never retests the high, right? So that leaves a little bit of a bad taste in our mouths as buyers, doesn't it? Right? Why couldn't they go back and retest the high? And that's why I said it feels like they might be trying for a range out here right now, right? We might be able to draw a trend line off these highs, a little trend line, right, coming off these lows. And this is what, if I had a crystal ball, I try not to trade what I think. I trade what I see. That's good advice, right? Don't try to anticipate too much, right? What's my direction? Where's my levels? Where's my entry patterns? Don't try to predict too much. But this definitely, the way it snapped lower, the failure to retest the high for me is just a big nail in the coffin, right, for those buyers. And the fact that they're right below that 3,500 really just shows me it looks like buyers are rejecting that idea of buying high, at least for now. That could change, obviously, between now and tomorrow morning's opening bell. So a bull spiking channel that fails to retest its high, right? We're bullish, but we're worried, right? We're worried. There's been a rejection off the highs. Will it go sideways? Really what I'm thinking right now is will we get stuck inside a bit of a range in here, right? Or will we continue running higher? Very much a possibility, right? These markets have been they've been beating their own drum recently, haven't they, right? So we may see it continue going higher here, pushing above that big round number, or we may also, and I think this is one of the biggest clues in the chart right now, is that open loop. We saw that real strong move down. Remember, anytime we see a strong move down, if they don't take out that high, there's a big bullseye right now, right on that low, right? There's a big bullseye right on that low because anytime we see a strong move in one direction, we know the odds of getting a two-legged pullback and a retest of that extreme are very, very good. So, boy, there's a lot going on, right? You got that open loop to the downside. You got that failure to the upside, and then you got what kind of smells like a trading range. So this is, like I said, this is a pretty challenging one here for tomorrow. So first of all, who has control? The buyers have control of this market. That's the most important thing to keep in mind right now. The buyers have control, and I want to be a buyer. Now, where do we buy? We buy at support. We buy underneath the market. We buy low, right? We buy low at support. So you'll notice I've got my support zones marked up down here just below this low, and I'm kind of cheating a little bit on this one because I'm kind of anticipating this becoming a triangle, and whenever it turns into a triangle, you want to focus on these edges, right? Focus on these edges. So knowing that we're bullish and knowing that A, the buyers are still trying to get that retest of the high, and B, the sellers have an open loop, right? This leaves a lot of variables, right? Because we know the bears, if they get a strong move down, they're going to want to retest that low. And I don't want to go stepping in front of a freight train here just because I'm buying at support here. At the same time, if the market goes higher here, I got to be very careful buying up here because we're at these highs, right? We're at these highs. So how do I absorb these problems, right? How do I account for these problems? Well, the answer is a nested failure pattern. It really is. It really comes down to that because let's say, for example, here, if we pull back here, right, what I'd love to see is my two favorite buy setups for tomorrow. One is going to be a nested failure, right? A 1, a 2 with a trap. And I look for a trap here just because it's not that deep of a pullback. And again, the reason why I'm looking for a nested failure pattern here, I'm basically waiting for, as we go lower, I'm waiting for bears to try once. I'm waiting for them to try twice. We call these nested, N-E-S-T-E-D, nested failure patterns. They're basically a failure inside of a failure, right? And I want to do that underneath that triangle. Again, I'm concerned that these bears have one thing on their mind to get down down to that 34.65 area. This is my way of A, protecting myself against buying high, and B, making sure those bears, make sure they get their opportunity. And if they fail, then I can be a buyer here right into those stops going higher from there. The other plan would be if this market rolls over. Now, if the market rolls over, this is where we really got to be patient here. Now, I realize the market V-bottomed off that low earlier today, but V-bottoms are very difficult to time correctly. They always look good in hindsight, but they're very difficult to time in real time. You might have already learned that lesson the hard way. Here's the key to making this thing turn back up again. One of the things I always say is the bigger the move, the bigger the failure. Right? So what I want you to think about right now is as we go lower, think about this sequence of patterns. This is honestly what I hope we get tomorrow. We may not get it. We may not get that deep pullback here tomorrow, but this is the sequence that I'd really love to see here. And that would be that obviously the move down, right? Let them fill that open loop. Let them close that loop. Remember, that strong move down says those bears, they want to retest that low. Remember though, this is a huge bull run. If you look out further on this, right, this is just one big range, right? So buyers, long-term buyers will be sitting there to at least try to buy off of that low. But again, if we get this big move down though, momentum is going to feel very, very bearish. So how do I buy at support when I'm worried about getting steamrolled by these bears, right? I let them try once in the pullback. I let them try twice in the pullback. And I look for a nice strong signal candle coming off that rising trend line. That trend line is probably going to be your best friend if we get that big move down. Now, remember, I would gladly take a trap. Right? A trap down here would be even better, right? So I don't want to say you won't do a trap there. A trap would be great too. But usually with these big moves down like this, what you want to remember is as it goes lower, let it pull back once, try it again. Nope, up, try again, right? Now these can sometimes take a couple hours. They can, right? Especially in the summertime Friday. So don't force that move. And remember, the bigger the move down or the bigger the move, the bigger the failure, right? What I mean by that is if it's a small move down, I can go 1, 2, and then back up. But if it's a really big move down, now you've got to make it wider. 1, 2. And the reason why is because you get a lot more bears you're fighting off. Right? They're throwing everything at you, right? When it's coming down and you're trying to absorb that bearishness. So now if I can get that, again, these are called nested failure patterns, a failure inside of a failure. If I can get that nested failure, then don't forget about, we almost always see that thing snap right back higher. Right? When we see it snap back higher, that comes in your trap pattern on the way back up, right, to retest those highs. So those are a couple setups I'm watching for right here on the S&P. At the same time though too, if the market runs higher, there's a couple things I'm watching too. If the market runs higher here, I'm watching for that 1, 2, 3 breakout pattern. Right? I don't want to buy into these highs, but if the market can give me a 1, 2, 3 break higher here, I would love to be a buyer. I'll mark up that high, I'll mark up that low, and we'll look for that buy, that first test, right? That's the best test off the low of that channel, right? Now, if we do get that, right, you're thinking big measured move, right? Big measured move up there, right, for those targets. We'll find more details on that once we get there. But strong move up, right? Pull back to the moving average, strong jump off the EMA, right? Mark up the high, mark up the low. First test is the best test. And again, I'm not trying to buy that first pullback because as you probably have realized, right, buying pullbacks near the highs of these ranges are not a very good strategy, right? They don't last, they don't work very well in the long run. You might get lucky every once in a while, right? But you're probably not going to make money in the long run buying pullbacks at new highs, right? So you want to wait for those highs to be confirmed and then go in and hit it. Right? I'll get aggressive on that first pullback, right? Those are a couple patterns I'm watching for as we go higher here. I think the biggest concern really is if we go sideways. If we go sideways, just sit tight. If the market sits here and goes sideways, sit tight. Again, not much changes. I'm still watching for traps. I'm still watching for nesteds right off of that low to be a buyer. Now, can I sell this market right now? Can I sell it? Absolutely. There are two patterns I'm waiting for to get short on this, right? One would be a crown reversal off the high, strong move up, big round number, major turning point, right? Completing their mission. Once they complete that mission, now buyers try once, pull back, buyers try twice, trap high, strong red candle, closing below the moving average, right? And we're selling off of that high. It's called the crown reversal pattern. Buyers try once, right? Buyers try twice, and then pull the string. The key here is you want that trap. That trap is your safe haven to avoid buying or to avoid selling into buyers, basically. Right? That trap is your kind of get out of jail free card to make sure you're not selling right into right where those buyers are coming in again. Another pattern I'm watching for here tomorrow is a classic 1, 2, 3 reversal. Now, the 1, 2, the reversal, boy, they almost had it earlier, didn't they? They almost had it earlier. But if we get a strong move down, and this is definitely possible for tomorrow. This is certainly possible for tomorrow, especially because we have that open loop there, right? So if we do see that strong move down here, watch that pull back to the moving average. I'll tell you, if they can blast right on through, right? If they can blow right through these lows here and be like, what lows, right? Just keep on going. Now we're talking. That's a beautiful 1, 2, 3 reversal, 1, 2, 3 breakout, whatever you want to call it. Mark up that low, mark up that high. First test is the best test off the high of that, right? Off the high of that new hidden channel. I would also be open-minded to a 2-try trap if the market really ran like really strong down. I would be open-minded here to a 2-try trap, a shallow pullback, a lower low, right? A trap high and a run through. This type of pattern though is much more aggressive. It requires a very strong move down, a shallow little pullback, that lower low, and that beautiful signal candle, trapping high, closing below the moving average, right, for that short going lower. Buyers, they want to retest those highs. Sellers, right, they want to get back down to that, I think it was 34.45. Yeah, 34.45 is an easy objective here for those bears tomorrow. So nested failure patterns, right? We got open loops on the charts. We got a lot of momentum we've got to worry about. Beautiful example, though, of a spike in channel. Will they retest these highs? You know, guys, we talk a lot more detail about these nested failure patterns, spike in channel patterns, range-bound markets. We cover all the details of the entire strategy in our free trading course. I'll put a link up here in the upper right-hand corner for you. If you haven't done so already and you want to make the most of our time together every evening on this video newsletter, you know, the best place to be is in my trade room every morning. But if you're not a member yet, right, make sure you grab that link in the upper right hand corner to get registered as a member of our free trading courses, that we can learn the strategy, learn my favorite setups. I'll send you hundreds of examples of my favorite setups, my favorite futures markets. Everybody loves the free trading course, so make sure you grab that before you finish up the session here tonight with me. And again, I'll put all of the important links, right, the trade room links, the free course links. I'll put all the good stuff for you guys down in the description of this YouTube video. All right, we are looking good. S&P ready for a summertime Friday. Better bring our sunblock tomorrow, right? Better bring our sunblock tomorrow. Who knows? Let's grab some oil here. Oil is not the easiest market either. A lot of whippiness right here on oil right now. What do we see here? What's going on here on this black gold, the Texas T, the crude oil futures? Well, we can definitely see this market rolling over. And we talked about how it was kind of interesting yesterday about with a hurricane coming into the Gulf of Mexico right now, right, Texas, Louisiana coastline there. It was interesting to see these markets, this market specifically, not really get very pumped up like it normally does, right? So a couple of you guys commented in the comment section last night about the absolute glut in oil inventories that we have right now, and I think you definitely hit the nail on the head. So thank you so much for the comments last night on that. It was a bit strange, right? We're going into this week here. They bought it up last week, but you would have thought you would have seen a little more personality this week here, right, on this oil market because of the hurricane. But you can definitely see that was not the case. So we definitely see it rolling over. We can easily see the bears. I think bears have very much control of this market right now. The bears, really what it looks to me is, it looks like we have a very strong move down. You can see that channel I've got drawn over, right? They have the overshoot. They got the overshoot. And anytime we see what? Anytime we see a strong move in one direction, what do we usually have happen? We usually get a retest of that low, right? Now, the fact that they missed that low and rejected it, this is where I start to think, okay, just like the S&P, right? We might be starting to see a bit of a range forming here around this $43 a barrel area, which should sound pretty familiar because we've had ranges around 43 quite a bit, pretty much all year this year, right? So we do know the market's bearish. It feels like we have a range going on right now, but you notice there's two open loops on this chart right now. One of them you'll see is that bear loop. So the bears definitely want to retest those lows. The bears also clearly, at least, well, maybe not that clearly, they have control of this market. So remember how I said the S&P is bullish, I want to be a buyer, right, until the bears take control? Well, the oil is bearish, and I want to be a seller. I want to sell at resistance. Now, on top of that, we see another open loop, and that is a very strong move higher, right? What does that strong move higher say? It's going to probably try to retest those highs. Now, this is where the magic comes together, because now we can say, okay, we know we're overall bearish, and I want to sell. We know the bears have a target to go back down to retest those lows. But at the same time, though, we also see this open loop that's been opened up above that 43.22. So as you can imagine, if we can close that loop, as we say in our trade room, right? If we can finish off that move, finish off to that 43.25, 43.30, in all reality, it might even go as far as a measured move. Right? We might even pump up all the way up to that 43.50 area, right? So we definitely may see even larger of a move. But from what I can tell right now, I'd like to follow this trend, but I'd like to wait for that open loop to get closed so I can then sell it back down, right? Ultimately, stick to the long-term trend, wait for that open loop to be closed, and look for a way to short it once those buyers kind of scratch that itch, if you will. So that's kind of the ideal, right? The ideal scenario for me, at least, if I had it my way tomorrow, I would stay away from the middle, right? I would avoid this middle because there's not much going on right there. I would wait to get that, right? I want to wait to get that open loop closed, if you will. And then it really all depends on kind of how we do it, right? Do we jump up into this trend line? Right? If we go into that trend line, do we go into the trend line, right? Buyers try and fail into a buyer failure pattern, right? It could honestly be a buyer failure into a bear pullback, right? I mean, it could be a nice sequence there of a buyer failure into a similar pullback pattern. Or do we see it, like I mentioned earlier, it might go all the way up to a larger measured move up here. Very common, right? Do we see it jump? Let's put this level right here, right? It could go all the way up there to that 43, what's that? 43.45, right? 43.45 area. If we do push a little bit higher here now that momentum is a lot stronger. And what's the best pattern when you're worried about momentum? Nested patterns or traps, right? So as we pull back now, right? Buyers are trying once, buyers are trying twice. Can I get some trend line, right? To use that trend line here? That would be ideal, right? Could I get a trap high up here? Boy, that would be incredible, right? So those are some options here I'm watching for this to get short right here tomorrow. So again, do we pop buyer failure into pullback back down? Do we really pop, right, into one, into two, and then back down? It really all depends on how this thing sets up on the charts that we're trading, and we'll obviously go over that stuff together every morning, right, in our trade room. One of the nice things, one of the nice parts about being with me in the trade room during the market moving for us. So we know that's where the bears are trying to get short up there. Now, what if the market rolls over? Right? What if it rolls over here? Now, the hardest part about the market rolls over right now is you got the open loop. And so we have to assume there's buyers waiting down here, right? We have to assume there are buyers waiting down here because they're going to try to do the same thing, right? They're thinking, oh, watch this. I'm going to get these sucker bears in here. I'm going to buy nice and low. I'm going to close that loop. So I have to definitely worry about that as well. Now, remember, it's a bear market. So I'm not as worried about those buyers than I would be as for the sellers, right? So I'm definitely looking at this as buyers down here. How do I get short down here? You know what I'm worried about? I'm worried about selling low. That's what I'm worried about down here, right? I'm worried about selling low. I'm worried about selling in an area where buyers, again, we're bearish, but we have the open loop, right? And those buyers might not care about the bearishness. They may try to buy that deep pullback here below that 60 area. So I'm worried about buying. I'm worried about selling low. What's the most effective setup that we use in our trade room that avoids selling low? Traps. right? I don't want to buy high. I don't want to sell low. The best way to avoid that is trap patterns, right? Now, what's a trap look like? In this example, a trap will be a move down. The moving average will come over. You'll see buyers try once. You'll see buyers try twice. And we'll look for that trap above the high. So as we go lower, that's the trade you want to look for down here. I'm not going to mess with that pullback. And the pullback might work, right? It might work. But there's just no way. The problem is you can't tell if it's going to work before or not, right? You can't anticipate it. And all you know is you're right at the low here. It's just not a very reliable place to sell, right? You can take 100 of those trades and maybe 40 be winners, right? 60 be losses. So my key here is I'm anticipating buyers below low. I know I'm a little bit low to begin with. So to make sure I avoid the buyers and avoid selling too low, trap, right? It ticks all the boxes there. Great setup for us if we can get that move going lower. Now, like I mentioned earlier, they may hold the pullback. You know, for all I know, they might hold that pullback, and there is a lot of open space if this market can make a run, right? Big, look at that wide open space down there, right? So big, wide open space there. Now, don't get me wrong, right? Oil has been a bit of a sleeper lately, so they got to do some work, right? They got to put the hard hat on and go to work tomorrow, but we got to get that strong move down. We've got to get that pullback, and they've got to hold and jump. If they can hold and jump off the moving average, now it's on, right? Mark up that low, mark up that high, sell that first test off the high of that hidden channel. 1, 2, 3 breakout into hidden channel pullback. And again, why not sell that first pullback? Why not sell that first pullback? Because you're selling extremely low and you're selling into an open loop as well, right? And again, I know we're bearish. I do want to get short, but trading is all about probabilities, right? It's not about maybe I can make some money on that trade. It's all about, is this the type of trade? If I took 100 of these trades, would I be in the green? Would my winning percentages be, 65, 70, 75%? The answer is no. I want to make sure I skip that trade. So strong move down, pull back, run, and then we can call that, right, a bear breakout, and we can sell the high of that new hidden channel. So those are the three, 4 different patterns I'm watching for here right now to be a seller. How about being a buyer right now? What do you think? Can I buy this market? Well, I'll tell you, this is not going to be a very easy market to buy right now. It really isn't, because you'll notice there's a range up there. And right above that range is right where that rejection happened from last night's newsletter. Remember that from last night? We talked about that rejection, right, and how they couldn't hold above that prior high. So there's very little, at least for now, there's very little that I can do to be confident buying a breakout running higher. So if we make a run higher here, I mean, in all reality, this could go 1, 2, 3 move, right? It could easily make a reversal here. I think it's unrealistic, by the way, to use this as your 1, 2, 3. I mean, I hope we get it, but that just seems like you're probably not going to be able to use that channel. That channel's probably too big, right? Just the way it looks, right? Probably too big. You're probably more effective if you look for a 1, 2, 3 move, mark up a smaller channel. But again, here's the problem. I have to wait for proof of this reversal, basically, right? I have to wait for proof that the buyers still have control of this market. But then once I get the proof, now I'm way too high now. So I got to wait for the proof, and then once I get the proof, okay, now I'm butting my head up against this brick wall here, right overhead. So how do I buy? What's my worry up there? What's my concern? My concern is what? My concern is I'm buying too high. Oh, we just talked about this. What's the best setup to avoid buying high or selling low? It's a trap. So now we can put the plan together. Now the plan makes sense. Let's go 1, 2, 3, right? We'll mark up that hidden channel. But what you think about, though, is on that move higher, look for that trap, right? On that move higher, look for that trap. And we're going to combine that trap, you guessed it, off the low of that channel. That's gold right there. That is gold right there. That is it's actually crude oil, if I might say, right? Gold's next, right? Gold's next, if I can have some fun with you guys here. How about a thumbs up for some jokes here today, right? It's a Thursday afternoon. We're the day before Friday, right? Happy day before Friday. Anyways, 1, 2, 3 breakout, 1, 2, 3 reversal into a trap low. And again, you always want to try to find that trap off support, right? Always want to buy at support. Be aware, though, right? Be aware. We've got to get into that stuff before we get back up into these highs here, right? We might see it just run, who knows what happened to the hurricane, right? Who knows? It might run and it may start grinding up into this area and sit into a range. And once we get more information on that, we'll start looking at it as a trading range environment here for tomorrow. That's the plan for the oil, right? The only thing we got to worry about right now is do we sit sideways here? Right? Do we sit sideways? If we sit sideways, we're still waiting for the same basic strategy here, right? If the market does sit sideways. So patience tomorrow. Not too much patience though, hopefully, because it is a summertime Friday, early in, early out tomorrow. And again, like I mentioned earlier, I cover all of these setups I've talked about today, failures, traps, right? All these moves here. I cover all of them in that free trading course. So make sure you grab that link in the upper right-hand corner. All right, let's wrap this up. It is gold. Let's do some gold. How about some gold? Now, gold was definitely not light on the volatility today, right? Gold was quite the market mover. Wild swings here, lots of open loops. What do we have right now happen on gold right now? Gold, believe it or not, is actually it's a relatively straightforward strategy here for us. There are three main components on this chart right now, and let's see if you guys can help me put together a plan here for tomorrow. First things first is there's a big bear move down. Right? Now, what do we expect to have happen when we see a strong move in one direction? We expect a two-legged pullback and a retest of that low. So there's an open loop, right? That's the term we use in our trade room. There's an open loop at that 1914.8 down there, and those bears, that's their bullseye, right? Well, actually, no, it's not their bullseye. It's one of their bullseyes. It's a bullseye. It's an objective, if I can speak proper English. Now, what else do we have here? How about some ranges? That's the second big piece of this puzzle, right? Now, we talked about this last night, how we had that pendulum down, pendulum back up, right? And we talked about how dangerous it was going to be last night, right, to buy high today, and because of that pendulum swing. Pendulum swings are legit. They do help to really navigate these major turning points when you have a range anchoring the middle of that chart. You'll notice now, if I take the measurement above the range today, right, that big pump up, and of course that big dump back down, that puts us right around that 1900, right, that big round number. So that's the big bullseye, right? That's the big objective for these bears. Now, remind me again, what does a range tell me to do, right? What does a range tell me? Ranges tell me to buy low, to sell high, and to avoid the middle. Right? Buy low, sell high, avoid the middle. Now, is this a market you want to buy right now? Maybe not, right? Maybe not. Now, again, we may change overnight. Something might be changed here. We might get a reversal, but we're not there yet. So being a buyer right now, probably not the best strategy for me here right now. I really want to try to sell, right? Sell above the top of that trading range. So think about that. Put that note out there. Hold on to that idea here for a second. It's a range. We want to sell above the top of that trading range. Now, third component. Okay, this is the curveball. Third component is this flag. Right? It's a flag. You call it a pen if you want. It's basically a bear flag. It's a strong move down and a very sleepy, consolidating channel going higher. Draw your trend lines up, and this, my friends, is a flag. Now, sometimes flags look like triangles. Sometimes flags are just simply channels. But what you're seeing right now is pretty straightforward. We have a very strong move down. It was obviously so strong that the bears are simply trying to get a higher price so they can, of course, get short, right? That's all flags are, right? That's all flags are, right? Your typical flag will be a strong move down, and it will start to grind higher, right? It's a bull channel after a big bear move down. All that flag is, it's just bears saying, nope, not high enough, nope, not high enough, nope, not high enough. And eventually what happens is they'll usually get above the top of the flag. Okay, keep that in the back of your mind, above the top of that flag, and they usually wind up kind of overshooting the high and snapping down through those lows. And there's actually two spots where I like to trade flags: above the channel and below the channel, as you can probably imagine, right? I thunked that up all by myself this afternoon, right? Genius, Joe, genius. I got it. Sell above and sell below. Brilliant. Anyways, I'm kidding with you. Let's talk about the plan, though. So now we have, groundbreaking discoveries here in this newsletter tonight, right? So strong move down, right, into my flag. I want to be selling above these highs, right, or down below those lows. If I can kind of flesh this out for us a little bit more here. All right, all kidding aside, bear market down, open loop for the bears. Trading range says sell above the highs, and what? Flag says sell above the highs. Where do you think we're selling? We're looking to sell above these highs. Absolutely. That's the best strategy here right now. In fact, there are two patterns I'm watching for here right now. One of them is going to be a pop-up, a buyer failure, and a sell back down. Again, following that plan of selling above the range, selling above the top of that flag or that wedge, whatever you want to call it, right? Again, still trying to go and fill that loop or close that loop at 14.8. The other pattern would be as the market goes lower. Now, let me zoom in closely on this because this is a really tricky one. This took me a long time to learn this trick here. So here's my flag, right? Here's my flag. What you want to remember is there are going to be buyers coming in right below this low, right? There will be buyers obviously there's no guarantee for anything, but usually there are buyers coming in right below that low. So you've got to worry, you got to be careful about buyers sitting right there and picking this thing off here and running higher. Because remember, it's a bull channel. So you're going to have buyers there looking for it, and because it's a range down here, we might see a lot more buyers than we really think we will, right? So there could be a lot of bulls down there trying to go back down into that trading range. I don't think it's it's not the most probable trade right now because of the open loop, right? But again, that doesn't mean the buyers won't try here. So what's the easiest way for me now to be a seller down here while I'm trying to rope in those buyers? Traps, right? Because as I go lower, I'm worried about what? I'm worried about buyers, and I'm worried about selling too low. Now, we talked about this before, right? We talked about this. Was it on oil, right? Market runs lower. I anticipate buyers are coming in. I'm anticipating buyers coming in. I'm trying to avoid, right? I'm trying to avoid selling short, too low. I'm looking for a trap, right? I'm looking for buyers trying once. I'm looking for buyers trying twice. And this ticks both those boxes. This allows me to get a trap high, right, to avoid selling too low. It also allows me to rope in some of these buyers, which I would assume are going to be waiting down there because of the range, because of the bull flag, or the bear flag, but a bull channel, right, the bull wedge. Okay, so that's the secret of success here as we go down off of this low. Now, they could easily make all this go away by going one strong move down, two hold the pullback, right, and blast this thing going lower here. My mouse will work properly there, right? Blast and go lower. Now, even if we get that pendulum swing, right? Even if we get that pendulum swing, if we can get a 1, 2, 3 break down here with some strength, I can mark up that low, I can mark up that high, and I can usually find a pretty reliable short on that first test of that high. Don't be surprised, though, if it does give you that, right, that first test and then goes sideways down here into a range, and we might be selling short with those two try failure patterns, right, later on in the range tomorrow morning, right? So definitely keep an eye on that. So that's kind of the idea here to be a seller, right? To be a seller as we go lower. I'm trying to absorb the buyers while avoid selling low. A lot of nuance on these charts here right now. How do I buy this market? What would be the best way to buy this? Really the only way I could really want to be a buyer right now, especially until they get that pendulum swing. Let's be honest, right? They may run all the way down. They might chop around a little while, and they might get a reversal, right? They might get a 1, 2, 3 reversal off of that low later on tomorrow. If that's the case, I'll mark up that high, mark up that low, right? And I'll buy or look to buy the first test off of that low. I'm definitely not trying to pick a bottom down here, right? Because if they make that move down, this now is very, very bearish, right? So I definitely can't pick the bottom here, but I wouldn't be surprised though, right? If the market does get that 1, 2, 3, we get that short, we go sideways here for a while, right? And then we go up over and bam, right? And then grab that new high, grab that new channel low. My mouse is messed up here, sorry. And of course, we're buying that first pullback, right? First test is the best test. That is a 1, 2, 3 reversal. Again, I'm not going to, don't be naive. Don't be naive. You cannot, you can do anything you want, but it's not a very reliable trade to try to predict that bounce off that low, right? A lot of times, those will come right back down in your face and stop you right out. I'd rather wait for that first pullback after we get the proof. And really the same thing goes to the upside, right? Now, if we go to the upside here, this could get exciting for the bulls because if they really run hard here, right? If they really run really hard here, that's going to be a failed rotation because we have that pendulum swing, right? So if they run hard, you know what I mean? If they really run hard here in the pre-market overnight session, that's a failed rotation. That failed rotation would be a huge clue. This now becomes a big bullseye right back at the 1987 area. So if we do get some strength going higher here, I am not opposed to obviously Obviously here a 1, 2, 3 breakout will be key. Right? 1, 2, 3 breakout. And please don't, this is not drawn to scale, guys. This could easily be a jump up here, right? It could be a small pullback and then a big jump from there. That is a 1, 2, 3 reversal pattern as well, right? So as we go higher, and again, what I'm basing the premise on here is they failed rotation, right? What should have happened didn't happen. That must be, right? That must be something we don't know, right? Something the market doesn't like or likes, and the market responds because of it. Targets back up to retest the high. I would also be open-minded too to a strong move higher here, a shallow pullback, right? And a two-try trap pattern here. I would not be opposed to that as well. I always, you guys know me, right? I always like to incorporate some additional hidden channel, right? Drawing those channels backwards, looking for those components to bounce off the low of those channels, right? So 1, 2, 3 breakout going higher, 2 try breakout going higher here, failed rotation, all in a day's work here for tomorrow. So what will the gold bring tomorrow? Remember, in a range, stay out of that middle. I think that's probably the hardest part for tomorrow. If we do get stuck inside that trading range, stick to the sell side until we see proof, either a bounce off that low or a strong rally, right, going higher here. And remember, the easiest way to master this stuff is to do it with me every morning, Monday through Friday, in our trade room. I would love to have you there with me every morning at the opening bell. Again, I'll put all of the membership information. I'll put the free course links down there for you guys as well. So find that big button below the video tonight on the blog or in the description of this YouTube video. And also, don't forget to call me if you guys have any questions, right? If you have any questions whatsoever, call that toll-free phone number. I'd be more than happy to walk you through the entire sign-up process. And then, of course, right, we got live support on the right-hand side as well. So again, tomorrow, early in, early out, right? Keep those lunch plans for tomorrow at lunch because we finished up right relatively early on a summertime Friday. And speaking of a summertime weekend, enjoy one of the last weekends of the summertime season. We got Labor Day holiday coming at us next weekend. So a bit of a holiday shortened week next week. But we'll talk about that next week though, right? Tomorrow morning, every morning in the trade room. If I don't see you guys there, come back and see us again next week for the next edition of this nightly newsletter. My name is Joseph. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.